Welcome, everybody, to a new analysis of Tradomics. This is the second episode, and after a little pause for the Christmas holidays, we are back on track to deep dive into the US main indexes. So today is the federal holiday in US, so we can get the chance to recap a little bit what has been happened on the last month according to the last analysis that we issued, and we are ready to apply the T-cycle analysis to predict statistically the future direction of the price. So let's start with Nasdaq 100 as usual. So we said in the last analysis that from this top we had all the evidence that we have a T+5 upward cycle already binded to the upside, given that is a positive one. And when I say positive one, is that the top from which it started was broken after a certain period of time, that in this case is um, was broken after 85 days, but we know that the minimum duration of a T+5 yearly cycle is between 189 to 339 days. So according to the last year, I also updated a little bit the durations here. Therefore, we have basically more than 100 days to continue the rally, at least. But we can have also more than 250 days to keep the rally alive. So this is basically the advantage to use a quantitative analysis over the technical analysis. Hence, we know that we will proceed to the upside, and we will proceed to the upside with this shape, and we will proceed to the upside at least until 189 days, which is basically until Q1, so Wednesday, 9th of April 2025 at least. But if we can also stretch the duration to a median duration, then we can proceed more towards summertime. Um, of course, we will have some pauses in between, and this is the first let's say cycle that is not a T+2, but it's more than a T+2. It's a T+3, T+4. T+3 is a 3 month cycle, and T+4 is a 6 month cycle. To develop a T+3 or a T+4 cycle, we need a certain amount of time or certain amount of candles below the absolute top in order to allow the development. So we have had so far a first T+2, a second monthly upward cycle, third monthly upward cycle, and fourth monthly upward cycle. Now the duration is from this top. We had a first T+4 of 112 bars. And now considering the duration that we have, or the amount of candles that we have below this top, is already sufficient to have a T+3 3 month cycle or a T+4 upward cycle. Therefore, this is why we had this push back down. We also broke up the moving average 21 period, and now we are hitting some support in correspondence of the moving average 50 period. Now, considering not just the upward cycle, but the downward cycle, at which point we are. So from this low here, we have all the evidence that a T+5 yearly downward cycle has begun. And from this low that was done on the 5th of August 2024, we have so far 104 days. So the first 3 month cycle ended up here after 63 days. So that we have the first T+3. And now we are in the second potentially monthly cycle of this second T+3. Okay, so we have had this first retracement here that was done after 41 bars, so basically close to the maximum duration of a T+2. And now for the next week, what we can expect is to have a pushback to the upside, because we need to have some other candles over this low to begin a T+2. And of course, we also have to study the upward cycles. Therefore, what we can also forecast, at least this is the high likelihood that the price will, let's say, will move for the next weeks, basically to the upside, because we will need also to close what, a T+2 upward cycle. Minimum duration will be 24, 25 bars by at least end of January 2025. Of course, we can also proceed more in terms of time to have something like this, for example, and then another retracement. But as we have from this top here already 16 bars, we will need also to have 3-4 days to the upside in order to close a T+2. So therefore, if from this low we have potentially the beginning of a T+2, then for the next week we will see more push to the upside. If we go lower this low, then we will need to make other considerations. But this low, it's basically happened after 41 bars, um, or even 42 bars. So basically, we have no time to keep going down to proceed to eventually close a T+2. So here the time has run out, 42 bars out of 44. Okay, so that's why, statistically speaking, also here from this doji that we have had by hitting the support moving average 50 period, we have more likelihood for the next week to proceed to the upside. First, to develop a downward cycle that might be a T+2, and then secondly, to start closing a T+2 upward cycle, which is the monthly cycle. Okay, so that's the situation we have on Nasdaq, and let's move to the Standard & Poor's. So the Standard & Poor's 500 compared to the Nasdaq, X said during the last analysis, but not only, is definitely stronger compared to the Nasdaq itself, because basically we haven't had time to begin a T+5 upward cycle. So here from this top, we had just the possibility to start a T+4, which means that the duration, below this low, was not sufficient to begin a T+5. This means that in this window of time, there were so many buyers, or the strength of the buyer was definitely higher compared to the sellers, that we didn't have time to begin a T+5. This means that when there is more buyers than the sellers, um, we don't have the possibility to begin wider cycles that are forecast to happen after, for example, an ending of a T+5. So after a T+5, you would expect another T+5, but because we had so many buyers here, the time was not enough to develop a T+5. Therefore, we had just a T+4. This is a sign that there are a lot of buyers eager to buy the Standard & Poor's 500. The situation here happened with a T+4 and did not happen on the Nasdaq, because on the Nasdaq we had 84, 85 bars. Therefore, we had time to begin a T+5. But here on the Standard & Poor's, we didn't have the same situation. Therefore, here you can see that the Standard & Poor's from a chart perspective, but also from a math perspective, is definitely stronger and more. There's a more stronger uptrend. And in this case, it's just not on the short term, but also on the mid term, because here the low, the absolute lows was done on the 27th of October 2023. So according to the last analysis here, we perfectly forecasted the move. That was the short term. And now here we can update the chart. So from this top here to this, from this top here to the top that was done on the 5th of December 2024, we have 101 bars. So from this top, potentially we might have the beginning of what? As for the Nasdaq, we can have either a T+3 or a T+4. Okay, so at the moment, Given that we have a total duration below the top of 23 bars, we have just a T plus 3. We need just another bar that is below this one, so potentially tomorrow, in which we will have enough time to say from this top we have not just a T plus 3, but a T plus 4. Okay. Here I remove the arrow. And now if we consider the downward cycles, from this top here, potentially we have a T plus 2. Why? Because if we gauge the total duration from the low here to the low here, we have 40 bars. So here we have more or less the same situation as the Nasdaq. We need a certain amount of candles above this low to develop a T plus 2. And at the same time, if we gauge the total duration from the absolute top, which is defined as a T plus 3, T plus 4, here we have 22 bars, which is not enough to have a T plus 4. We need 24 bars, right? So we will need at least 2, 3, 4 days to the upsides. And this is the target here. The target is at um, 6,021 dollars to have the hook to the upside and therefore to close the T plus 2. Okay, then potentially we will need another retracement and then back to the absolute tops here, because as for the T plus 5 on the Nasdaq is positive. As for let's say from a mirror um, rule, we will have also the Standard and Poor's chasing the Nasdaq, or the Nasdaq in this case chasing the Standard and Poor to the upside. Okay, so that would be the way forward for the Standard and Poor's. So next week, over the short term, we will forecast to have more push to the upside rather than the downside. This is the first target, and this is of course the second target at $6,049. So let's move now to the Dow Jones. On the Dow Jones here, according to the last analysis, we were forecasting this retracement and then another move back to the upside. So we can update the chart from this top here to the absolute top that we have seen on the 4th December 2024. We have 35 bars. So this top is definitely the beginning of a T plus 2 upward cycle. Okay, this is the T plus 2. Then we have had this retracement, and if we gauge the total duration from a downward cycles perspective, from the top of the from the low of the 4th of November until the low that was done on the 2nd of January, we had a total duration of 40 bars. So as for the others, here we have potentially the beginning of a T plus 2. At the moment, we don't have so much, let's say, push to the upside. So for the Dow Jones here will be important to see the next weeks. In terms of downward cycle, here I would expect the same situation as for the other indexes. So I would expect more push to the upside in order to develop at least a T plus 2. Then we will need to understand whether this T plus 2 will lift the price back to the tops, or eventually will do something like this. Then this low at 42,174 is our checkpoint to control whether we will need either a negative downward cycle or if the cycle will stay positive. Okay, so that's the first thing. The second thing is we need to have a look at the upward cycles. So from this top here to this top here, we have 178 bars. 178 bars is time that is encompassed in a T plus 4H. Therefore, here we can put T plus 4 hybrid cycle. So the hybrid cycle is a cycle that connects two different grades of cycles. In this case, is a T+4 and a T+5. Okay, so you have to imagine the duration like a Gaussian distribution, and the probabilities that are on the limits on the extreme left of the extreme right are the less likelihood that that can happen. But in such little possibilities, we have the hybrid cycle. So that is the definition. From this top here, considering that we have total duration of 23 bars here from this top, we can have, of course, potentially a T+3, T+4 upward cycle. Okay, so here this is the update of the chart. Now, the Dow Jones is a little bit more difficult to read compared to Nasdaq and Standard & Poor's because I bring a doubt since the 31st of July 2023, in which from this top here, we could have potentially a T+5. It's not really a T+5 because my segmentation was that T+5 was happening here on the 13th of December 2022. But since this top, we haven't had the possibility to begin another T+5 because if we gauge the total duration from the stop here until here, we have 157 days, which is not enough to have a T+5. From that top to Wednesday, 20th of March, we have 317 days. But here we don't have the condition to have another T+5. And if we now gauge the duration, for example, from this top here to this top here, we have 339 bars, which is basically a T+5. So here we need to see if from this top will not generate not just a T+4, but a T+5. Why this is important? It's important because if from this top we have a T+5, then we will need to spend more time below this top. And more time to develop what? More time to develop another T+5. And if we are lucky, a T+5 can have this shape, so it can return back to the tops. But otherwise, we can have a shape of this kind. So it's not given by fact that we can go back to the absolute tops. So here the situation is a little bit more tricky compared to the other two indexes. I would say that there should be a specularity in all the indexes. So I think that now the Standard and Poor's is the strongest, and then Nasdaq is following. So I'm not forecasting a drop down for the Dow Jones, but here we need to see over the short term if we will be able first to reach out and break the stop at 43,115, and then subsequently this second top at 43,373. Okay, this will also, as for the other indexes, allow to close at T+2, and then we will have to see if the price will be already pushed back from the moving average 21 or the moving average 50. But in general terms, I would say that there is more likelihood for the next week, so the next week or next weeks, to proceed to the upside to develop this T+2. Okay, but as always, um, let's check this low, because if we break down this low, then we will have a negative cycle with further room to proceed to the downside. Okay, so that's the situation we have on Dow Jones, and we conclude the analysis with the Russell 2000. So last but not least is Russell 2000 Small Cap Index. So according to the last analysis here, I was really in doubt whether this was a T+2 because we basically turned this T+2 positive really soon. So I had a lot of doubts, but really this one was the beginning of the T+2. So here now we can update the chart. So this T+2 is here. So this was just a weekly upward cycle, and here we have the T+2. this is a T plus 2 that is not just a T plus 2, but it's something more. If we gauge the total duration, here we have a T plus 2H, 48 bars. So here we can put a T plus 2H. And here we have either the beginning of a T plus 3 or even the beginning of a T plus 4. Why that? Because from this top here we have 166 days. Okay, and from this top here to this top here, we have 82 bars. So here we can even put T plus 3 slash T plus 4 upward cycle. So as said in the last analysis, here we have a T plus 5 that is turned into a positive one. And of course, we need some pauses in between. So we have had this first T plus 3. Then here we have the second T plus 3. The sum of the first T plus 3 plus the second T plus 3 can make a T plus 4. And then back again. So if we have a 4 times a T plus 3, we will have this shape or even this shape and so on. Okay, now we have to monitor what is going to happen. So from a downward cycle perspective, we have here potentially the beginning as for the other indexes of a T plus 5. But considering that now we have a total duration from this low here to this low here of 97 bars. So here potentially we have the closing of a T plus 2, but also for T plus 3 or a T plus 4, right? So we have already the minimum duration to close a T plus 4, even if 97 bar is pretty close to the minimum duration, but the duration is there. The second thing is that if this is not a T plus 4 and actually we are not seeing so much push to the upside, the second consideration that we can do is that here we have the first T plus 3, then there's a second T plus 3 has turned into a negative cycle because this low here at $2,194 is lower compared to this low here at 2,200. Okay, so given that this is lower of $6, here we can have another T plus 2 eventually, and then we will return back to the absolute lows here, potentially with a test in approximately in the area of the moving average 200. So here you have to be a little bit, let's say you have to be careful, because if we are not going immediately back to the absolute tops, here we have a situation in which this T plus 3 is negative. Therefore, we have a bounce back to the upside of a dead cat, and then we will return back. The time to do this little game is between 27 of January 2025 and Tuesday 25 February 2025. So be aware that in this situation we might have a fake to the upside and then back down. Okay, so that's the situation we have on the Russell. Even though here, because we have a T plus 5 upward cycle that is positive, the let's say the forecast is to return back to the absolute tops. But here we have a T plus 4, so we have time actually to spend. So the price as time, or the hedge funds or funds or high frequency tradings have room to do whatever they want in this price range. Okay, either they do a fake like a move up and then down, or they proceed to the upside and then a little bit of retracement. They can do whatever they want. And a T plus 4 is 194 to 168 days. So basically there is time until summer to do basically whatever they want. So be careful in this situation. And if you want to have more ad hoc analysis over the short term, because the cycle analysis can be applied also in intraday session, you can email directly us at rodomica@gmail.com to evaluate more the risk that you can have over the short term and how to plan accordingly your positions. Okay. Um, Last but not least, potentially here we have also the closing of a T plus 5. So here we have all the condition to close at 191 bars. But eventually here they might have time until 288 until 339. So eventually what they can do is by 6th of March 2025, having another cycle like this, and then the beginning of a T plus 5. Here we have all the condition. So here it's a T plus 5 already done. But eventually they can also do this a second move, okay? So we need to be open and we need to be aware of all the possibilities that we have at this particular point in time. So that situation we have, I would leave this analysis with this arrow, because this is the checkpoint to gauge whether from this low we will have a T plus 2 or even more T plus 3, T plus 4, or we will have a cycle that is going to go up for a fake move and then back down again. Okay, so I leave this arrow for further checkpoints, or further check for the other episodes. Thanks for watching. See you to the next one.